All right. So welcome back. We're going to go ahead and start on chapter 9, cash, right? Cash, credit cards, checks, and EFTs. Okay, well, first off, what is the importance of cash? Well, since we learned about assets, liabilities, equity, our accounts, the most in particular important asset is going to be cash. Okay? Cash is very, very useful, especially because what we do with cash is it's a way that we receive money from selling a product. It's also our means to go ahead and pay off our liabilities or things that we want to buy for operating our business. Okay. And also, a good thing about cash is it's also another means to pay for goods and services, right? It is our way that we use to exchange for goods and services, right? And of course, in the US, we use the US dollar, okay? I believe the US dollar is widely used worldwide. Even other countries would prefer to use the US dollar, all right? Because it does, it's just our means to be able to exchange for goods and services. So, especially with having cash being readily available, right? It's going to be another way if we could exchange for goods and services. Okay. Another way too is, instead, if you don't want to carry cash around, is to have a check. Okay. A check is straightforward, right? Instead of having cash available in your pocket to buy goods and services, we could also use a check, which is linked to your bank account. Okay. This check is usually provided by your bank, of course, or it's not created. But you do go to the bank and be able to get this. Now, the importance of a check is that it is one, the best way to keep some kind of paper trail, okay? Especially when you're keeping track of your transactions, right? Because in this case, you can always keep tabs of where your money is going. Instead of something like cash, right? Which is it's actually difficult to keep track of because, you receive money and you spend the money, right? Your only means to be able to for surely ensure that you actually spent the money is that you just count the money in your pocket, right? Or you count the money that's in your wallet and that you start with, and then buy exchange those goods and services, and then come back and realize, oh, I don't have this much money anymore. Where a check, what it does is when you do pay for goods or services, right, you're always able to check your bank account to see whether the money has been taken out or not. Okay. And here's a few things about a check as well is it's not as easily transferable as cash is, right? Cash is almost instant, right? In this case, checks sometimes take anywhere from 2 to 3 business days to process, right? So here are a few things that you need to know to make sure that a check that you write is actually valid, right? Number one, you need to have the person that you're writing the name that you're paying, right? A lot of nowadays, they're not going to be willing to accept a blank check, right? You have to be designated a person that you are writing this check out to. And even more strict is that you can't just be writing nicknames on there. It has to be the full person's name that they can identify at their own bank institute. So in this case, no nicknames, no anything, because it will not process, it will not work. Okay? And of course, the date. The important thing about the date is you can write the date and have the check available for the future. Okay? So oftentimes a best technique of this is that if you ever see your paychecks, right? Sometimes if you get paid on Friday, right, but you get to receive your check on Thursday, you won't be able to cash it out or deposit it into the bank until the following day, right? Because it's dated that it's not you're not able to take the money out until Friday. So that's also one thing that you could also have a parameter for making your payments is you can date stamp it. Okay? And you can make it optional to choose when you want the date when you want the check to be actually cashed out. Okay? Second thing is you also need to have the amount, right? You can't if you can't pay for things if you don't have a check amount. Okay? And fourth thing is going to be the account number. Obviously, that's going to be given, right? If your account number is going to be at the bottom of your check. Okay? To where the money's being taken out from. And last but not least, you need a signature. All right? You won't be able to process a check if you don't have a signature. The signature verifies that you are processing this check for this amount and you approve it on this date and you etc. Right? It basically verifies all the information that you're making a transference of money. Okay? So of course, right, nowadays, in reality, we hardly use checks nowadays. The only one that actually is using it is, yes, banks. Is businesses, right? Okay, especially when they have to purchase items and they have to pay for things that are like thousands of dollars. You would not necessarily mail out $1,000, right? You would use a check to write out to the company for that $1,000. Okay. So that's that there. So that's a huge business way to keep track of your transactions is by using a check. It's the best way to have a form of paper trail. Okay. Another one is using business credit cards. Okay. Well, a business credit card serves to be, the most convenient way to pay for things, right? Whether it's a credit card or if you, choose to, you can have your business debit card, right? That works as well, that where you don't have to pay someone else. You just use the company's bank account to just pay for things. But in this case, right, a business credit card is usually the most easiest way to transfer money from one to another, right? Because, instead of having to carry a checkbook everywhere or having to carry cash with you everywhere, it's much easier to carry a piece of plastic, right? So here's a few things that you could make a note for, when using a credit card, right? It is easy to use because all you do is just swipe and pay for things. Now, here's a few things that you need to know because as a credit card company, right, this is money that you are borrowing from other bank institutes. This isn't your money itself, right? Unless you're using a bank debit card, right? Because that's directly linked to your bank account. But a credit card, right, is basically borrowing money from another bank. And by borrowing, right, every time you make a purchase, right, you're having this bank pay for you in advance and you pay them back, right? So this is going to be considered a current liability, all right, where you're constantly charging money, right? You're having this bank, this credit card company pay for things for you in advance, and then you go ahead and after the end of the month, you pay them back by writing them a check and also including the interest that you agreed on for borrowing that money. So that's a few things here. Now, there's also another rules, especially when you accept credit cards, okay? So using a credit card is very, very easy, right? But when you allow your customers to accept or when you allow your customers to pay with their credit cards, there is a few things that you need to know about this too, because you have to actually forfeit a percentage of your sales, okay? Meaning you have to pay into these credit card companies for allowing customers to accept that they can pay with credit card. Now, especially with the vast majorities of today's society, right, where credit cards are more widely used than any other form of currency, right? Like I said, not many people use cash all the time, right? And second of all, not many people carry around checkbooks around either. They rather have a credit card that's easily available and easy to transfer from one account to another. Now, with this, right? So as a person who sells products, right, you do have to pay a percentage of your sales, or you pay a flat rate. It just depends on what product you sell. So if you, for example, sell something that's less than $100, I believe that's something where you could do a flat rate. But if it's more than $100, right, if it's like thousands of dollars, that's where they're going to say, hey, you are going to have to pay these credit card companies about 2 or 3 or up to 5% of your sales, because that is the agreement that you have being a business, right? And you're partnering up with these credit card companies, and what they're doing for you is they're collecting the money for you. They're paying you, right, for whatever they purchased right away. And they're collecting the debt for you, meaning the customer doesn't owe you anymore, they owe the credit card company. So by doing so, instead of having accounts receivable, right, having them owe you, they're going to take over. And by that, it comes with a price. So using credit cards, right, for us, it's easy because all we got to do is just understand that it's money that we owe, right? But we have to agree to the percentage of interest, right? But if we allow our customers to also charge on credit card as well, there's a percentage that you have to also pay to these credit card companies to, for collecting the debt for you. So at the end of the day, you lose, especially with credit cards, because at the end of the day, they're gaining so much money from both ends, whether you're a consumer or whether you're a vendor. Okay? And of course, the most interesting one that we've seen so far that's very popularized right now, it's called electronic funds transfers, okay? So again, another easy way that the bank nowadays, right? So this is a new feature that's been around for about maybe, I would say, I don't know, maybe 5 or 10 years now, maybe less than that, less than 10 years, but it's becoming more popularized and becoming more normalized, right? Is electronic funds transfer, right? Which is where you're allowed to wire money from one bank account to another in a click of a button using your phone, right? So again, a lot of banks such as Bank of America, Chase, and Wells Fargo, they use things like Zelle, okay? Zelle is where they can transfer money from one bank account to another, Okay. Other forms is like, Cash App, Venmo, where, you're able to pay using an application that either takes money directly from your bank account and pays that person directly, but they have to transfer to their bank account. So in this case, those are also things that you can use to transfer money. And nowadays, right, especially with a lot of independent contractors, they're wanting to use things like Zelle, Cash App, or Venmo to easily transfer things. So instead of you having to carry your wallet, right, you have things like this, right? Things like Apple Pay, okay? Right, where all you have to have is your phone, and you just tap your phone, and it's as if you paid using, a credit card or whatever it is, right? But you're electronically wiring money from your bank account to another entity, okay? So again, fairly widely used, right? It's so easy to use. It's you don't have to carry anything more than your phone, which is something that with today's society, you have your phone everywhere you go. All right, you're able to download and access your bank applications at any given time and be able to transfer money instantly, right? And usually with Zelle and things like Cash App, Venmo, things like that, right? They usually take a 24-hour toll. Zelle is almost within 30 minutes. You'll see the money get taken out of your bank account. Okay, and so on and so forth. So very, very easy way to transfer money or to accept money as well. Okay, so here, what I'm talking about here is I'm introducing you to what the concept of means for us to spend money, right? But also our means to how we collect money as well, okay? All right, because this is going to be an introduction to chapter 10, right? Because this is our means of how we collect money when we sell a product or when we, need the money to pay for items, okay? So the first thing I'm going to talk about here is, well, since we're talking about exchanging money with our customers or, having money that's readily available for us to spend, I'm going to introduce you to 3 concepts here. So first one's going to be the petty cash, right? So once again, petty cash. What is a petty cash? Okay. A petty cash drawer is basically a small lock box that has cash in it, right? And this cash right here is meant for the business to make minor expenses, okay? Meaning, all right, since we're we're looking into a sole proprietor, right? The boss may not be in the office at any given time at any moment that you need them, right? So what this lockbox does is it allows you to, have emergency cash that you can use, right? Without, permission of the boss, of course, that in case when things come into where you have to, go run out and buy supplies or have to make some minor business expenses, right? Go buy postage, whatever, for whatever reason that you need the money for, it's the business's money that you're buying to make a business expense. So it's for just minor business expenses that you don't have necessarily the boss or the person who's in charge of buying things, right? That's not there available for you to be able to ask or purchase, right? Or you need those items right now. So again, this lockbox has one sole purpose, and that's for small minor business expenses, okay? So that's 2 key features that you need to have for a petty cash drawer is going to be, number 1, you need a safety physical lock box, right? You don't want to have money just laying around in a drawer, right? That's dangerous, and that's not a secure way to handle money. But this one, right, the purpose of having this is so then when people try to steal it, right, they can't steal it because it's locked. Okay? And usually there's someone in charge of it. Okay? And then, of course, last but not least, you need to create a ledger account. Okay? All right? So, other things that you could also use this for petty cash is that if for any reason that you want to, you can use it for reimbursements, for business credit cards, right? You can have a lockbox to hold the business credit card, and you can also, it's also going to hold things like cash receipts. Okay. So, an example, a cash register, which we'll talk about in the second concept here, is going to be more or less going to be very similar to a petty cash. But in this case, let's focus on just the petty cash first. Okay. So now let's talk about this, right? Petty cash. So how do we establish a petty cash? So as we talked about this, right? You need to have some kind of lockbox, okay? Now think about this. Lockbox is essentially like, readily available cash that you could use to pay for things that you need to pay for at time of, at the very moment in time, okay? So in this case, right, let's say here for the example, we decided to have a petty cash, right? You need to, number one, the manager needs to establish some kind of amount in the petty cash to have at all times, right? And then, of course, the second thing is you need to journalize it, and then you need to create the ledger account to, be able to know how much money you have in the petty cash drawer at all times. So in this example here, on January 5th, okay, you establish a petty cash to be a total of $500, okay? So that means there's $500 in the lockbox for you to make minor business expenses. So in this case, if you run out of paper, you could take somebody in that lockbox and go to the Office Depot and buy some paper, right? That's the purpose of this. So what you're going to do is you're going to debit your petty cash. And where is the money going to come from? Okay, hold on. Where's the money going to come from? It could come from your checking account, obviously, right? How else are you going to put your own business money into a petty cash drawer, right? It doesn't come out of nowhere, right? You can't be putting your loose change in there and say, this is my petty cash drawer, okay? Yes.
So this is like different than the safe box. It's different.
Yes, because a safe box is actually no, yeah, it's the same thing as a safe box. Yes, a safe box is a good example of a lockbox. Yes,
Oh, okay.
but obviously you don't use the safe for any more than just cash, right? You're not putting your own personal belongings in there. You're not. It's not like a locker where you're putting, the boss's expensive watch in there, right? You're using the safe to hold money for the business for any reasons that you need to take that money out to make a minor business exchange, make a minor business expense.
And this is like we could open it like exactly same when we open the safe box.
What do you mean?
Like we could open it with a checking account. When we open the account, we could open the locked box.
No, this isn't opening a bank account.
Oh, is it this one just for the company?
Okay, Lau, if you remember, I said an easier way to understand what this lockbox is. Think about a cash register.
Cash register. Okay, okay.
You need to put money in it. So how do you get the money to be in there? You need to go to the bank, right? Get the money and put it in this box.
Okay.
It's an actual physical box that
Yeah,
has a lock on it.
my question is the individual they could be open it or just the companies?
Whoever's in charge of it can obviously open it, because they can open it to use the money that's inside it.
Okay, thank you.
It's like how do you exchange money with your people, with the cash register, right? If you can't open up the cash register. Yes, you can open it so you can use the money that's inside it. However, obviously, you need to have one person who's in charge of that, because you can't just say anybody can open it and use the money in there, because anybody can steal the money. Anybody can take the money and not record that they're using the money for something. So we'll talk about how to use the petty cash money in the next slide. Okay, but the main idea here that you need to know is that it's an actual box that you put money in.
So we need to take this money from the box and put it in an account in a bank.
No, opposite. You're taking money from
Oh,
the bank and putting it into this box.
to save it for when we need it.
Yes,
Okay.
yes. So for example, right? Let's say someone ordered pizza for the business, right? How are you going to pay for it? You're not going to pocket that out of your own pocket, right? That's going to be a business expense, right? So you're going to take the money from the petty cash drawer and pay for it, because the company's hosting the party, not you.
So the box is gonna be in the company or in a bank?
It's a physical lockbox. It's gonna be in the business. It's gonna be at the location.
Oh, okay, okay. I thought like same the safe box is gonna be in the bank. Okay.
No, 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 no. Okay. Okay, now I understand. No, it's not a vault in the bank. It's not an actual safe box in the bank. It's gonna be at your business.
Mm-hmm. And
Okay.
somebody in charge whenever we need, they just draw money from this box and pay for whatever we want, like cash, just cash.
Correct.
Mm-hmm. Thank you.
Okay. So then there you go. So when we so that's what this is. This is an actual physical lockbox. You obviously you can't like have it in front of everybody to see, right? It has to be properly stored somewhere where only the person who's in charge of it knows where it is. Okay? So we call this the petty cash. So that's what we got to do. Now, in order to have that reflect on our books, right? We need to journalize that we have a petty cash drawer and that we put money in there from our checking account, right? Obviously, you're not gonna go to the ATM and pull out money and put it into this box, right? You need to physically go into the bank, because you might need to get like things like 20s, 10s, 5s, 1s, right? You need to have money that is easily to be used or easily to be taken quantities out of. Okay? So again, so you can make those minor business expenses. Okay? So that's why we got to make this note here saying, well, we need to go to the physical bank and we need to grab the money, and then we need to take it back to our store and put it into this lockbox. Okay? And we're going to call this petty cash. Okay? So therefore, when we plug our numbers into our ledger, right, this is going to let you know how much money you have in the petty cash drawer at all times. So in this case, by journalizing that on January 5th, that means my lockbox has $500 in it right now. Okay? So then, how do you actually spend the petty cash? Well, in this case, right, like we have someone who's in charge of the petty cash drawer, right? And what's going to happen is that So when you need to pay for things, we're going to record that someone is taking money out, right? We're going to say how much did they take out from the petty cash drawer. And then we're going to record they must come back to me with the receipt and the exact change for that transaction. And this is going to go into the lockbox. Okay? All right? That's how you spend the money in the petty cash drawer. So as someone keeps coming in and requesting money, right, to use from the petty cash drawer, right, their obligations is that they have to come back with the receipt and the exact change. All right? Now, every time someone does that, right, and as you know, you have multiple people coming in to take money out from the petty cash drawer to buy things for the business, right? Ultimately, the box will slowly be decreasing in cash and increasing with receipts. So the whole box is going to be full of receipts and then some change left. Okay? And that's how we spend the petty cash drawer. Now, let's talk about this. When we do that, right? So in this case, right? Let's take a look. So here's what the manager needs to do. Okay? They're going to record that. Okay, I started my petty cash drawer with $500, right? And see, as you can see, the month of January, we had Sam, right, on the 10th, take some money to buy meeting supplies, okay, for, I don't know, their weekly board meetings, okay? They took out $25, right, to buy business supplies, and then they came back with $23 receipt with the exact change of $1.15, right? And this is going to go into the lockbox. Now, every time you put that money back into the petty cash, right, and the receipt in there, you need to also calculate how much money you have left, because you want to make sure you know how much actual physical cash you have in the box left to be able to, let other people take the money, right? Because if you don't know how much money you have in there and you just let a whole bunch of other people just be able to take the money out whenever they want, you're never going to know how much money you have at all times. So the person who's in charge of this needs to keep a good track record, especially when let's say Katie borrows $150, right? If she doesn't come back with that receipt and the exact change, your assumption is she either forgot or she stole it. Okay? Because there's no proof that she took the $150. There's no proof that she used it to buy a business expense. Okay? So the receipt must come back with the exact change. Because again, this isn't their money. This is the business's money. And this is no means of making a payment to an employee. Okay? Obviously, we'll talk about payroll in chapter 12. Okay? Payroll is going to be a completely separate thing. This isn't more or less for you to collect your tips. Okay? This is meant to make for minor business expenses. So things like, again, if you had a grand opening party, if you had a staff meeting, right? Or you need to buy some office supplies. So oftentimes, right, sometimes the office, right, it might run, it prints a lot of paper, and, you might end up printing too much and that you don't have enough paper to last you the rest of the day. So you take a real quick trip to Office Depot, right, and you buy a ream of paper that you think is going to last the rest of the day. And that is the minor business expense, because you're not paying for that. That's not your expense that you need to do. That's for the business, right? You're not buying paper for yourself. You're buying paper for the business. So in this case, that's an example here for, Kyle. Maybe Kyle bought office supplies because they ran out of paper. Okay? So this is what the petty cash manager does. They keep track of who took the money. So then if that person ends up taking the money and doesn't come back with a receipt and exact change, you know exactly who took the money, right? And of course, you know exactly why they took it out because they have to explain to you why they need that money for. Okay? Because if they don't tell you, then your assumption is they're probably stealing the money. So in this case, they have to tell you exactly why, and they have to provide you the exact receipt. Okay? Now, how do they know exactly how much to take out? It's called research. Okay? It's called calling the person ahead of time and getting a quote, right? So you know how much you need to take out. Okay? So then once they take the money out and they come back with the receipt and they come back with the exact change, the person who's in charge of it is there have to be calculating how much money you have left. So in this case, at the end of January, right, we have an ending balance of $443.18 worth of receipts. And then you have a leftover cash of $56.82. Okay? So now my lockbox only has $56 left. Okay? How do you replenish it? Okay? Is going to be the next question. How do I go ahead and put more money into the petty cash drawer? This is how you do it. Okay? Here is where you're going to count up all the receipts. You're going to categorize them based on what expense they were. Okay, so again, if you take a look here, right, we have a bunch of meetings, meeting supplies, staff meetings, office supplies, delivery fees, okay, party supplies. So then in this case, we're gonna take those amounts and we're going to divide them amongst our accounts here. So we're gonna divide them amongst our business expenses, right, business supplies, okay, business events, okay, meals and beverages. So if the company provides, donuts for everybody, right, that's considered a meal that the company supplies. All right. So XYZ, you're gonna list out all of them, right? Because right now my lockbox has a bunch of receipts. Those receipts are all of your business expenses. So you're gonna separate them by what kind of expense account they belong to, right? And you're gonna tally up the total, right? So in this case, we already said that the total amount was $443.18, right? So in this case, right, we need to put more money back into the petty cash drawer. Now, how do you do that? So what we're gonna do is we're going to tally up our totals. So here's all of our receipts, right? And then now that gave us a total of $443.18. And then now we're going to go back out to the bank, right? We're going to write out a check because the person who's in charge of the petty cash drawer is going to go to the bank, cash out that check, and take this $443.18 and put it back into the petty cash drawer. Okay, so then they have $500 to start for the next month. Okay? All right? Think of, if this concept is a little difficult to understand, think of a business credit card, right? You have a credit limit on it. In this case, my credit limit is I only have $500. If you let all of these people, Sam, Kyle, Tyler, if you let this person keep charging to the point where they spent $443 and there's only $56 left of credit, how do you put money back into the credit card? You pay for it. Simple. So in this case, this is the same idea and same concept, right? I need to have my petty cash drawer have money at all times. So when I reach the end of the month, or usually when you're just petty cash drawer, it's just low in general, you notify the boss. The boss says, okay, do the accounting, right? Go ahead and give the the lockbox to the accountant, right? Let them tally up how many expenses there were in there, and then let me know how much money I need to cut a check out for. Okay? So in this case, $443.18 was the exact amount that was spent, right? So that's the exact amount that I'm going to be writing out, because when you put this money back into the petty cash drawer, right, including the $56 that you already have in there, your total at the end of the day is still $500. Okay? Does this make sense? Is this clear? Yes.
So it's gonna be we don't record it without the body cash. Like we do it record like same the we have the receipt and we just put it uh, or what is like we don't record it. Like we don't say we draw this money and we did this with this. Like same when we was doing the journal.
No. This is what the person who's in charge of the petty cash drawer writes down. But no, we don't record it until we replenish our petty cash drawer.
And is it like 500 all the time? We can't go up or
And we'll talk about that in a couple seconds.
okay.
So in this case, my lockbox must hold a total value of $500. Yes.
I have a question.
Mm-hmm.
So, how did we calculate the change back? Like I see the 115, 341, 1378. Did we add it back to the balance?
Well, in this case, right, you started out with $500, right? Someone took $25. That means you have what, 475, right?
Right.
And then you add, because they didn't spend all $25. They came back with $1.15.
Okay.
So then you add that back in. Yes.
Okay. Thank you.
So in this case, you don't really need to be focused more on this side. Your only focus here is what happens. How do you establish a petty cash, right? You establish it by knowing how much money you need to have in that lockbox. Now, how do you replenish the money in there? Simple. You're going to add up the total number of receipts, because that's all the cash that's gone. It's no longer there in your lockbox. You need to put that money back in there, or you need to have $500 in your lockbox at all times. So in this case, you're going to record all the receipts, all of those expenses that you did, and you're going to write a check out for the exact amount. So then when you take that to the bank and you cash it out and you put that money back into the lockbox, now you just added $443.18 plus the remainder of the $56.82 that you had at the end of the month to equal up to $500. Okay? So how do I increase it? If I find that using my petty cash drawer, right, and I see that it's getting low and low and low and almost to the point where it's I need to increase it. So in this case, in February, right, I need more money into my petty cash drawer because the previous month, right, we were very close to becoming zero, right? We spent $443, right? So my $500 is not enough. So how do I increase my petty cash drawer? Well, so in this case, what you're going to do is you're going to talk it over with your boss and say, well, we spent all this money within January. We need to increase how much money there is in the actual petty cash drawer. So what you're going to do is you're going to get that and you're going to have the boss write you a check, right? And what you're going to do is you're going to take that money and put it into petty cash. Okay? So that when you journalize it and you plug it into your ledger, you're going to increase the petty cash drawer by however much amount. So in this case, I requested $250. So that means my lockbox, right? Because the previous one on January 31st, you had the boss reimburse the petty cash drawer. So now it has $500. And then you ask the boss to increase it on February 5th by $250. So now 500 plus 250, you should now have 750 in your lockbox. Okay? Then you're going to go ahead and go through the motions. So then by February 28th, you're going to have all of these expenses, right? Totaling. So in this case, right, we already went through all of it. And this is how we do it. What you're going to notice is that I'm recording all of the expenses, right? I'm tallying up how much money I spent. So in this case, I spent $178. So maybe this month in February, I didn't spend as much. I only spent $178 even. And what I'm going to do here is when the boss cuts me the check, take it to the bank and put that money back into the petty cash drawer. Okay? Now notice this. I never recorded any of my expenses as my expense and petty cash, right? I never credited my petty cash at any given time. Same thing when I replenish my petty cash. I don't add money to my petty cash, right? I'm just simply recording the expenses and I am paying cash back into it. Okay? Why is that? It's because at the end of the day, your petty cash drawer must hold a value at all times. What this does is it's basically money in advance, right? It's money that's laying around that you can use for minor business expenses, and you don't record it until you are gone. It's empty, right? Same thing, right? I gave the example. It's very similar to a business credit card, right? You have a $500 limit. What do? How do you make it have $500 back again? You pay for it. Okay? Now in this case, we'll talk about credit card in a couple sections here, but that's kind of like the idea here is that you have a credit limit, you have X amount of dollars that you can spend. You only have $500 you can spend. You spent X amount of dollars, so now you need to pay it back. Okay? So then the next time you use it, you have the full $500 left. So in this case, I just spent $178. I need to put that money back, so then my bank account has $750 at all times, or my petty cash does. Okay? So that's that there. Now, how do I close out the petty cash drawer? Right? Let's say you no longer need it anymore because you decide to get a business credit card, right? It's much more easier. Okay? So when you do this, right, and you need to close out your petty cash because this cash that's in a lockbox, it's just going to be laying around and you don't want that, right? Because you don't want anyone to just, one day rob your store, right? So in this case, right, how are you going to close it out? So let's say on June 1st, you decide to close out your petty cash drawer because you decide to get a business credit card, right? So with that, you're going to go ahead and, what are you going to do with $750? You're not going to put it in your pocket. You're going to put it into the bank. And then you're going to credit your petty cash. All right? $750. All right? And then when you put it in your ledger, it should give you an account balance of 0. So that's when you close out, is where you don't have any money in there at all. Okay? Any questions here? Okay. So let's talk into more familiar terms. So, because petty cash, right, not every business is going to have one. right? It's only meant for minor business expenses if you think you need to have it. But don't forget, you can also use that as a way to reimburse, right? Because oftentimes, what employees can do is they can use their own money and then request the business to pay them back and reimburse them. But that's not um, the main lesson here, right? The main lesson is that yes, you can have a possible box of money that you can have for minor business expenses. Now, here's another example, right? That you can have a lock box full of money, but this has another purpose, right? Cash registers. What's the purpose of having a cash register? Well, if you're going to have a store that sells products and services, you need a cash register to exchange money with your customers. Okay, if they're paying you $20 for something that's only $15, you better have enough money in your cash register to give them $5 back. Okay, so that's what a cash register does. Is essentially it acts more or less like a petty cash drawer, but you can't take this money yourself to buy minor business things, right? The cash register holds money so then you can exchange with your customers. So then when you have a sales, right, you give them their exact change back. So here's the same, it has the same characteristics as a petty cash, okay, where it has a physical lockbox, right? And you need to create a ledger account for it. So in this case, right, you're going to take money from your checking account and you're going to put it into your cash register, right? How else do you have a cash register full of cash? Right? You have to go to the bank for this one because you need to also get the correct number of quarters, correct number of dimes, nickels, and pennies, right? You need to have exact change in a cash register, right? Now, in this case, it's just for keeping track of cash sales, right? Because you'll be getting receipts, right? And of course, you're exchanging money to your customers. Now, here's the huge difference between a petty cash drawer versus a cash register, right? You have the same features of establishing it is one. The increasing and decreasing is also going to be the same, and closing out the cash register is going to be the same. However, replenishing the cash register is not something you need to do. Okay, so let's go ahead and go through the example. So you decide to establish a cash register, right? You decide, I'm going to have a store. It's going to allow customers to pay me in cash to buy my products and services. So in this case, I established the cash register, right? I got to talk to the boss and say, well, this is how much I think we need to have in the cash register at all times, right? And you're going to journalize it. Then you're going to create a ledger account to hold the money in there. So in this case, I need a total of $500, okay? I need 20s, 10s, 5s, 1s, quarters, dimes, and pennies and nickels, okay? So in this case, I'm not being specific because it doesn't really matter here. The idea is that you're putting money into the cash register. Now, Ken, you're going to have the boss write a check out. You're going to take that check. You're going to go to the bank and get this exact change. And then you're going to take that money and put it into the cash register, right? And then we're going to call this cash in register. Normally, okay, a lot of businesses use this as cash on hand. Okay, same thing. Cash on hand, cash in register, whatever you want to refer it as, cash. It could be just cash account if you want to. Okay, so in this case, I'm being more specific, saying this is cash that I have in the register. Okay? So that means at all times, I must start with $500 in my cash register at all times. Okay, this is going to be very important, especially when you're trying to keep track of your cash sales. Okay, so how do we actually spend the money in the cash register. Here's the thing. You don't spend it. Okay? You simply use it to exchange money with your customers. So in this case, right, you're going to be gaining money opposed to spending the money, right? Because if you're selling a product, right, they're giving you the money. You're collecting the money. So in this case, that's how you spend the petty cash drawers. You don't. You just are only exchanging with your customers and you're collecting money. Okay? But the whole thing about this is when you do this, right, you need to keep your separation between your cash sales with your credit sales, right? So if you allow, customers to either charge on credit cards or charge on an account, so if they have an account with you, then those are going to be separate, right? Because that's not going to help you on your total cash sales. So you're going to be collecting your cash sales receipts, okay? And when you do this, this is what you have to do. At the end of the day, when you're done with all your sales, you're going to calculate how much total cash sales you have. Okay? And then you're going to calculate every dollar that you have in the cash register. Okay? So you're going to do that. So you're going to count the money in the register and you're going to count the number of cash receipts. Okay? Your job is to match up your total cash receipts with the total money that's in the register plus what you started out with. So in this case, right, I started out with $500, right? And then I have a total receipts of I don't know, maybe you sold $560. So therefore, you should have a total of $1,060 in your cash register. Now, in this case, right, if that is so, then that means you did your accounting correctly. That means you have the correct amount in your cash register and it matches with your total cash sales. Now, in this case, right, your cash register will not need to be replenished because, again, it's being increased with the cash that you sold, right? You sold products, you're collecting the money. However, the only thing that you will be needing is to exchange, let's say, because if a lot of your customers decide to give you a bunch of $20 bills and you exchange all of your tens, fives, and ones, then you're going to just need to convert them, all your 20s, into those 10s, 5s, and 1s so you have it readily available. Now, what you normally do is, since you calculated the total cash sales to be, whatever, $560, and then you started out the cash register with $500, then it's simple, right? You simply record that you gained $560 through sales, right? And you have the choice. You can either deposit that money or you can take that money that you just earned and increase your cash register. But in this case, there's no need to, because if $500 is enough to get through a month's worth of sales, then you don't need to. Okay? So what you do is you're going to take that $560 and dump it into the bank and hold on to those $500 because that's how much money you need to have in the cash register at all times. Okay? You must start out the day with $500. You must end the day with $500 plus whatever you collected sales for that day. Okay? Straightforward. This is very, very, very easy business concept to understand. Right? Okay? So in this case, how do I replenish the petty cash drawer? I'm sorry, how do I replenish the cash register? You don't. You don't need to because you never spent the money in there. You gain money in there. So there's no need to replenish a cash register. Any questions here?
No.
So how do I increase the cash register? Maybe sales are picking up and you need to have more money into the into the cash register so you have enough money to exchange with your customers throughout the day. Then you just request for an increase. And then let's say February 5th, you said I need $250 more into my cash register. Then you go ahead and add that to, you journalize it like this, right? You go get the check, you add the money in there, right, to the cash in the register. So that means from here on out, I must start in the cash register with $750 in the cash register at all times. Okay? So then I can start my day and calculate my receipts and so on and so forth to match up my total cash sales with the total money that I have in the register. Okay? And of course, for any reason you decide to close out and say, I'm never going to use a cash register anymore. I'm going to go digital. I'm only going to be accepting credit cards, EFTs, debit cards, whatever reason, okay? Then all you simply have to do is just say, well, I have $750 in the cash register. You're not going to pocket it. Again, you're going to dump that money into your checking account. Straightforward. You're going to make a deposit of all the money into the checking account. Right? Any questions? Straightforward.
No.
Okay, so then again, once you journalize that, boom, I closed out my cash register. Okay. So let's talk about business credit cards since it's so widely used, right? So instead of having a petty cash drawer, let's say we have a business credit card, okay? It does have the same key features. You do need to have a safe place to put it, obviously. You can't have a business credit card lying anywhere. You need to have a safe place, so usually the cash register would be a place that you would put it, like you could put it underneath, right? Or you could put it in a drawer that's locked, okay? And of course, you're going to create a ledger account because this is a liability. Every time you use a credit card, you owe money to the credit card company, okay? So that's the only difference between the petty cash and the actual credit card is petty cash is an asset, right? It's your own business money that you have readily available to spend. A credit card is where you're borrowing money from a credit card agency, right? Or a credit card bank company, and they're letting you borrow the money to make these minor business expenses. So again, you're going to be collecting your receipts, right, and invoices for proof of a transaction. And also, again, another way that you can prove that you did a minor business expense is you have your credit card statement at the end of every single month, right? And again, it's a liability because you're borrowing money to pay for these minor business expenses. So here is going to be the difference, okay? You will not be establishing, you will not be increasing, and you will not need to replenish or close out a credit card, okay? In this case, we'll talk about how to replenish and close out because at least that one is straightforward, right? You just have to pay for the credit card, okay? But you won't be needing to establish or increasing or decreasing the credit card, okay? So let's talk about this. How do you establish a business credit card? Straightforward. You don't, right? You simply go apply to a credit card company for a line of credit or some kind of credit card, right? And it's going to, once they approve, right, you're going to agree with what percentage of interest, right? And what they do for a business credit card is they are checking your background to ensure that you are eligible to acquire a business credit card, right? They're going to be checking at your background or your credit score and so on and so forth, okay? Once you get approved, right? Um, the credit card company will establish you your credit line. So in this case, you don't request $500 credit. They run your credit score and they determine how much money you're actually able to afford or be able to owe. Okay? So in this case, you don't establish it. The credit card company does it for you. So that's why there's no need for you to establish your credit card, because you can't predict or you can't determine how much money you're going to be getting. It's going to be given to you. Okay? So again, once you've done that and you got approved, you're going to create a ledger account for this credit card. Okay? So again, on January 5th, okay, you were approved for a Visa Gold credit card, okay, with a credit limit of $500. So in this case, you applied, you were given, and this is what you got. You got a credit line of $500. Now in this case, no entry is necessary, because here's the thing here. Because it's a liability, right? We have to understand that if you got approved of it, right, and you have $500 credit, the idea here is no transaction was made because you didn't spend the credit card. You need to spend the credit card in order for you to need to record it. So in this case, this is something that you need to make a note to the financial statements, which will, right, which is part of adequate disclosure, because you need to make a note that you have a liability credit card on file. You need to let them know how much your credit line is, and you also need to let your financial statements know that you are going to be charged interest. Okay? So in this case, but however, when you receive the credit card and it has a credit limit of $500, the idea is you haven't spent the money. You don't owe them any money yet because you haven't spent it. So there's no journal necessary. Okay? So then I pop it into my ledger account, right? Or I create one, but because I didn't spend any money yet, I just opened up the account. There's nothing I need to record because I didn't record a journal entry, so there's nothing I need to record in my ledger. Okay. So how do I actually spend the credit card? This is the most straightforward thing that you can do, right? When you spend the credit card, you just simply buy things with it, right? You want to buy some office supplies? Here's my business credit card. Boom, swipe, done. Right? And it will calculate that off your credit card automatically for you. So how do you spend it? Well, you just use it by making purchases, right? And of course, you must bring back the receipt to your accountant so then they can keep track of it and match it against the credit card statement and so on and so forth. But the idea here is you have to record the transaction as you go, okay? Because think about it, right? When you buy something, so for example, on January 10, right, you end up purchasing office supplies for $56, right? And you use your business credit card. Now, a business credit card, if you use it, it's as if you paid for it, right? You use the business credit card as if you paid for it, okay? And that's going to track up on your liabilities because you spent money on your credit card. So that's the same idea here, is you need to recognize this. Every time you use your credit card, you're going to record your expenses as you go. You don't wait till the end where you replenish your credit card, right? Because then you're not keeping a good track record of your business credit card. Okay? For petty cash, you don't need to. Okay? You need to keep a good track record of your business credit card. All right? So that means every time you buy something, you need to record it with the receipt. Okay? So in this case, that's what happens here. You need to record the transaction that you bought $56 worth of office supplies. So then when you pop it into your credit card ledger account, it says here that on January 10, you bought office supplies, you owe now $56 to the credit card company. Okay. So then, how do I replenish my business credit card? In this case, right, what you normally will be getting is you will be receiving a credit card statement. This usually is always given at the end of every month, right? So here it is right here, right? It gives you all of this information, and it even includes one key feature. It includes interest, okay? Now, here's the thing. We will talk about how to calculate interest tomorrow. But for this, right, for now, understanding how interest works is you're borrowing money. So you must pay back the money plus a little more. All right? That's how we understand interest. So in this case, right, the credit card statement is going to list out all of our transactions that we've made. So it's going to give you your transaction list of everything, right, with the dates and everything. And it's also going to include a portion of the interest. So in this case, right now, out of the $500 that I used, I purchased a total of $175.30. Okay. I got charged with 18% interest, which is normal for any kind of credit card, right? Which charged me $2.63. So 18% is an APR rate, which is an annual percentage rate. It's not like you're charging 18% for the $175.30, right? No. We'll talk about how interest is broken down. Okay? So therefore, your bill statement tells you that you owe a total of $177.93. And then the billing date due is on February 5th. Okay? Straightforward. You're going to be receiving this. Every single credit card company will issue this to you unless you choose the option to do paperless statements, where your job is to make sure that you're checking your credit card statements every single month through an online source, okay? A lot of people nowadays, right, if you're able to travel with your phone and do things like Zelle, where you online banking, or EFT transfers, then you're able to check your statement at any given time, right? That's the great thing about having a credit card, application on your phones, because if you charge something, right, you can check your credit card statement right then and there. Okay? So that's just that there. So you should be receiving some kind of form of statement, and it should let you know how much interest you were charged. So how do I replenish it? Because right now I am short $175.30 on my credit card, right? That means I do not have the full $500. So how do I replenish it? Simple. You just pay for it. So here on February 2nd, you decide to pay for your Visa Gold credit card. Okay? What I'm going to do is, first off, I'm going to double confirm on my end what amount I owe on my actual credit card. Okay? Because in this case, right, on my statement, it says that I purchased with my credit card a total of $175.30, which is correct. But why does my billing statement say that I owe $177? That's because you were charged interest. Interest is a completely separate thing. Now, yes, you could update your credit card with that interest if you want to, but in this case, no. This interest is separate than what you used on your credit card. You didn't use your credit card to pay for the interest. That was the terms and agreement that you have to agree with. Your credit card, right, will still hold the amount of money that you still owe on it, but you're just being tacked on with extra interest. Okay? So in this case, I recognize that I'm paying my Visa payable credit card, right? That I owe $175.30. But what I also have to do is I am going to be writing out a check. But I'm going to pay off the entire bill, right? Because I owe $177.93. So what I'm going to do here is, well, because I owe it, right? Or I owe this much money, I'm going to pay for the full amount. That means I'm paying off my credit card that I owe for $175, and I'm also paying interest of $2.63. So once again, interest is usually calculated as a separate thing. Once again, yes, you can use your credit card if you want to record that you, because it does go on to your credit card, right? It does take away a part of your credit card. Like it shows up on your credit card statement saying that you were charged this amount. But at the end of the day, right, you would, in most cases, you would keep this as a separate charge versus part of the actual credit card itself. Because in this case, right, you're looking at your principal, right, of what you owe, which is $175, and the interest that you've collected on top of this $175 is the $2.63. So in this case, it's usually calculated separately, and usually it's expensed as a separate account. Okay? All right? Any questions here? All right? So once you make the payment, then, right, you're going to zero out your credit card, your Visa payable, because you said that you made a payment for a debit of $175.30. So therefore, your balance is going to be zero. Okay? And then obviously your interest is going to be something else. Okay? Right? How do you increase it? Straightforward. You're going to talk to your credit card company about that to increase your credit limit. And there's no journal entry necessary because, again, you're increasing the credit limit, but you're not spending that money. All right? Same thing with closing up the account. If you choose to no longer use the credit card, simple. Pay for it, cut it up, and that's it. Right? You don't really need an entry there because you paid for it. Straightforward. Okay? Any questions?
No.
Okay. So let's talk about cash shortage and cash overage. So oftentimes what you're going to notice is that when you do your accounting, right, you're counting the total number of receipts, and you're also counting the total amount of money that you have in either your petty cash or cash register or so on and so forth, right? And oftentimes you're going to notice that when you end up calculating them, right, your totals may not match at all times because of the reason of many things, right? Oftentimes, especially when a cash register, right, your customer says keep the change, right? And you accidentally to drop the money back into the cash register, right? No, you don't do that. The best way to do that is have a tip jar and put the extra money aside and calculate that later, okay? But oftentimes some things can do that, right? Maybe the owner decides to come in and decides to take the money because it's their money and not record it. So there's many reasons why you will have discrepancies, especially when you're adding up your total of your receipts and matching them towards your total money that you have in your petty cash or cash register. So let's take a look at an example of a cash shortage. So in this case, we're just using the petty cash for now, okay? So on June 1st, right, you had a total petty cash of $600, right? And then at the end of June 30th, you end up calculating a total receipts of $590, and you have no more cash left in the petty cash drawer. Okay? So if you have a total of receipts of $590 and you don't have any more cash in the petty cash drawer, right? This is a cash shortage because you're supposed to have a total of $600 in the petty cash drawer at all times. Okay? Including the money that you spent in there, right? You're supposed to have a total of the receipts equaling up $600. In this case, I don't. I only have $590 and no more cash left into the petty cash. So in this case, what I'm going to do is I'm going to have to recognize a cash shortage. Okay? So in this case, I'm missing $10. So what I'm going to do is the petty cash drawer must hold a total value of $600 at all times. So because I recognize that there's a cash shortage of $10, I'm still going to cut a check out for $600 because the petty cash has to be $600 at all times. Now, what you need to do here is you need to investigate where those $10 are missing. Did the boss take that $10 to buy something, right? And they didn't record it because it's the owner, right? The money in that lockbox is theirs. So in this case, you're going to investigate where that $10 is missing. Maybe maybe at the very end of the day, you took that $10 to, buy some coffee creamers and bring it there tomorrow in the morning, and you forgot to last minute write down all the information, right? So for any reason that you have that $10 missing, you need to investigate where it went. Okay. Cash overage. Okay, so same scenario except this time, right? On June 1st, right? We still established our petty cash at $600. However, on June 30th, we had a total of $600 in receipts, and you had a remainder of $20 in your petty cash. Okay? Now, in this case, that's weird. I just spent $600 of cash, and I still have $20 left in my petty cash drawer. So what I'm going to do is I'm going to be recognizing that there's a cash overage, right? You have too much money now. You have $620 in the petty cash drawer when you shouldn't. You should have only $600. So what you're going to do here is you're going to accept that $20 that's still in the petty cash, and you're going to write a check out for $580 because in this case, that's going to make sure that you still have $600 in your petty cash drawer at all times. And what you have to do here is you're going to have to investigate why you have $20 left in your petty cash drawer, okay? Maybe the boss was like, "Oh, I forgot. I borrowed $10 last time, so I'm going to throw in $20." Okay? That's possible, right? Again, never, ever use the petty cash drawer as a means to dump your loose change in there, okay? That's not the purpose of it. It's not for you to, "Oh, I have a couple pennies in my pocket. I'm just going to throw it into this lockbox." No, because that's where your accounting will always get messed up. So if you have that reason, then those 3 pennies in your pocket, put it in a jar on your desk, okay? Hold on to it, whatever it is, right? Don't put it into the petty cash drawer, right? So in this case, there you go, $20 overage, and you have the checking for $580. Okay. Chapter review. All I really want you to get out of this is how do I establish a petty cash drawer? How do I increase, decrease, or increase and close out? But mainly, I want you to focus on how do I replenish a petty cash, okay? The cash register is just an extra scenario to kind of understand the petty cash. And a business credit card is also another extra idea. But at the end of the day, a business credit card is easy to pay for, right? It's easy to replenish. But the main concept and the idea here is I need you to understand the main concept, which is having a petty cash and how do I replenish it. Okay? All right, let's go ahead and do the exercise real quick, and then we'll go on a quick break. Okay? All right, so chapter 9, petty cash exercise. All right, so assume that questions number 1 to 3 are related. Okay, so on January 10, you decided to establish a petty cash fund for a total of $250. Journalize. So how do I journalize this? That I establish a petty cash.
Petty cash.
Good, right? You're going to recognize that there's a petty cash. And what else?
The ledger.
Not the ledger. What account am I going to be crediting?
Accounts receivable.
Not accounts receivable. Accounts receivable is when customer owes you money. So how do I establish a petty cash? In essence, how do I put money into the cash or into the petty cash? Where's the money coming from?
The business account.
Business what account?
Checking.
Yes.
Cash.
You're not going to have cash. Well, you can, but you're necessarily no. You wouldn't have cash laying around for you to just put into the petty cash, right? It must come from your checking account, okay, for $250. And we're going to say here to establish petty cash. Okay. Number 2, okay, on January 12th, you took $20 from the petty cash fund and then to pay for some party supplies, okay? All right, costing a total of $18.57. Journalize.
So it would be petty cash for 20.
No.
Checking account.
No.
Supplies.
No.
Oh. 20.
How do you spend the petty cash money?
In cash.
No, because that's what the petty cash for is. It's for you to make those minor business expenses. But when do we actually recognize, or when do we record that we spent the money?
When you make the purchase.
No.
At the end of the.
At the end. So in this case, do I need to record this transaction?
No.
No. You have to wait till the very end when you are calculating all your receipts. That's where you recognize that you bought office supplies or party supplies, okay? So in this case, no entry necessary because you cannot take money directly or journalize money taking out directly from the petty cash because then your amount in your petty cash will never be the same. And that's not true, right? You want to hold the petty cash drawer to hold a total right now of $250. So if you're taking money out from the petty cash drawer, right, you're essentially decreasing the petty cash drawer and it's going to say that now your petty cash should be less than what you established it for. Okay? So no entry necessary there. Okay, you wait till the end. Right? So then on January 31st, okay, you counted a total of receipts in the amount of $179.65, and then you had a total cash left over of $70.35. Replenish the petty cash fund. Assume that the receipts were for business expenses. Okay, so it's January 31st. So party supplies is going to be considered as a business expense. So this is your total amount of business expenses. So how do I replenish the money in my petty cash drawer? Okay. In essence, how do I put the money back into the petty cash drawer? Because right now I only have $70.35.
You pay what you owe.
You pay what you owe. Well, in this case, this isn't a credit card. This is right. This isn't a credit card. But you're gonna pay for.
Pay the amount that you use.
Yes, you're gonna pay for the amount that you use. So in this case, I used up $179, and I'm gonna recognize these as business expenses, right? For $179.65. Right? If I'm gonna put $179.65 back into the petty cash drawer, including the $70.35, how much should I have in grand total? What's my total amount gonna be then?
$250.
It's gonna be $250, which is exactly what I established my petty cash drawer for. Okay? So again, you're gonna write a check so then you could put the money back in there. Okay? All right, questions number 4 through 6 are not related to the previous questions. Okay, so question number 4. On February 1st, you decided to establish establish your cash register to have $500 in there. So how do you do that? How do you establish your cash register to have $500? How do I establish cash in my register?
You go to the bank and get the denominations that you need.
Good, but in this case, I'm journalizing it. If I'm going to go to the bank, then where's the money coming from?
Checking account.
It's going to come from your checking account, right? For $500 to get the denominations, right? Now, where am I putting this $500?
Into petty cash.
Not petty cash.
And on the register.
You're going to put it into the register. So in this case, I usually say cash in register. So you're actually putting money into a cash register. Okay? And that money is going to come from your checking account. Good. Number 5. Okay? On February 15, okay, at the end of the day, you counted a total of $156 of cash receipts and a total of $656 cash in the cash register. Replenish the cash register.
You don't.
You don't. So in this case, no entry, right? Because in this case, you have way well over enough money in the cash register, right? You have $656, which is more than what you started with, right? You started with $500. Okay, so you don't need to replenish the cash register. Okay. So then number 6, on February 28, okay, you decided to switch from a cash register to a credit card only transactions. journalize the closing of the cash register? How do I close my cash register?
You added all the cash.
Okay, but how do I? So what I mean by here is like closing up and switching to a credit card only transaction. Meaning I need to get rid of my cash register. How do I get rid of my cash register?
You put all the money back in the checking account.
You're gonna put all the money back into the checking account. Good. Right? And therefore, if I'm putting all the money back into my checking account, I'm taking it out from my cash in the register. Okay? And I believe I established it for $500. So this is not including the sales. This is before. Right? Good. All right, questions 7 through 9 are not related to the previous questions. So, number 7, okay, on April 1st, okay, you applied for a Visa business credit card and got approved for $1,000 credit with interest of 18% APR on unpaid balances. Record this transaction. How do I record that I got approved for a credit card?
Credit card.
So a credit card is a liability. Did you borrow the $1,000 right now?
No.
So you didn't spend the money yet. So do you need to record this?
No.
No. You just got approved. You haven't spent the credit card yet. So in this case, no entry necessary because you didn't buy anything yet. You just got approved. Okay. Number 8, okay, on April 10th, you purchased office supplies for $56 and you used the business credit card to pay for the purchase. Record this transaction.
Office supplies.
You bought office supplies? Good. For $56. Okay. And how did you pay for it?
Credit card.
You used your credit card. So in this case, we're going to be using what's an account called Visa Payable, right? Because it's a liability, right? You owe it. But I'm using my Visa because that's what my business credit card is. It's a Visa Gold card. So Visa Payable is going to be the account. Good. Okay. Number 9, okay, on May 1st, you received your credit card bill, okay, and you had a total purchases of totaling up to $568.49. And you had interest of $8.53, totaling up to a current statement balance of $577.02. And you decided to pay the credit card bill with a check. Record this transaction. So you're making a payment to this bill. How do I record this?
Check.
You're writing yourself a check. I mean, you're writing the company a check. Yes, so you're going to be checking. For how much?
57702.
Okay. What else are you going to what are you making a payment for?
The Visa payable.
Good. You're making a payment to the credit card. Okay. What else are you making a payment to?
Interest.
You're making a payment to interest. Okay. Now, how much money do you actually owe on the credit card?
568.49.
And then how much interest do you actually owe?
853.
Okay, $8.50. So that's how you are going to journalize this. Good. Okay. Question number 10. Okay. If you have established a petty cash for a total of $200, okay, at the end of the month, okay, you calculated a total of receipts to $155.20 and a total cash to be $50. You have a blank in the petty cash.
Overage
You
of 520.
Good. You have too much money, so therefore you have an overage. Good. Okay. Number 11, if you have established a petty cash drawer for $200 and at the end of the month you calculated a total receipts to be $150.54 and a total cash of $24.46, you have a blank in the petty cash. Shortage, right? Because 150 plus $24 is what? 174, and you're supposed to have $200, so you're missing money. So therefore, you have a shortage. Okay. All right. Any questions in regards to chapter 9?
No.
Okay.